Hey, how are you? I hope you're doing great. I'm making this video to explain the Divvy Rent-to-Own Program. Everybody needs a place to live. It's just a matter of what you qualify for, what you can find, and what fits your lifestyle the best. So I want to offer this as a way to, or another option for you to potentially, find your own place and find a place to live that best suits your lifestyle. So with that being said, I'm going to jump right into things here and share my screen and get into things. So Divvy Rent-to-Own Program. This is a really cool program because it allows people that don't qualify for a traditional mortgage to actually get into their own home of their choosing and rent that home back from Divvy after they buy it for you with all cash. So it gives people the option to go out, find a home that they like now, and be able to lock that home up so then they can later on buy it when they are ready to qualify. So getting into things here. So benefits of Divvy Rent-to-Own, right? So it allows you to live in the house you can afford now while building up your credit and your financial history to then be able to buy the house back later when you're ready to do so. It also, a really cool thing that Divvy offers that most rent-to-own companies don't is a rent equity. So instead of just renting, right, and having all your money just, thrown to your landlord, they actually put a percentage away for you when you are renting. So if you have $2,000 a month in rent and say you qualified for the 10% savings program, they're actually putting $200 away for you in a savings account every single month that you can then use for your down payment and closing costs when you are ready to buy the home. Now, over a year, that's $2,400. 2 years, that's $4,800. And 3 years, you'd have $7,200 that you can use to put down for your down payment and closing costs that you thought you were just spending on rent anyway, right? So it's a cool thing. You get to choose any house on the market that fits within your monthly budget, right? So a couple things to note: if you don't qualify for quite as much as you thought you would, then you can put a higher percent down to be able to have a higher buy price on the home that you like. The requirements are much easier to meet than a traditional mortgage. This is really the reason why I'm making this video, because most people that can't qualify for a traditional mortgage and don't know about this program are just missing out on the opportunity all in all. So the requirements are a lot easier. It attracts a lot more people. And it's cool because Divvy actually comes in all cash and we get to have a strong offer instead of you saying maybe only qualifying for a FHA or something, where our offer is going to be a lot weaker than the other offers coming in more than likely. You get to walk away from the home if it's not the home for you. One thing to note about this is you have to put 1 to 2% down on the home that you're buying. So that 1 to 2% down goes into your savings account along with your rent equity. But if you do walk away from the home, you do forfeit over that 1 to 2% to Divvy. So keep that in mind. There is no application fee and it does not affect your credit to apply. It is a soft pull on your credit. So it does not hurt to see if you qualify. Couple things to know about Divvy. Divvy charges market rate rents, right? So I say about $1,000 is about $100,000 in buying power, depending on, your credit score and your financial income, and also how much money you're going to put down on that house. There's a few different factors, but I like to just keep that in general. It does vary, so keep that in mind. It's not fixed like that. 1 to 2% down payment is needed. Like I said, this payment will be saved when you're ready to buy unless you walk away from the home within 3 years. Another thing to know about that is if it takes longer for you than 3 years, you can negotiate with Divvy on, extending your lease with them. So keep that in mind. When you buy the home, you do pay the appreciated market rate, right? So if we buy a house for $100,000 and in that market it's appreciating at 3%, you're gonna end up paying $103,000 after the first year, and so on and so forth. So keep that in mind. You will be paying what the future price of the home is, not what Divvy bought it for while you're renting it. If anything breaks in the home, Divvy is responsible for it as your landlord. So in this case, you're still renting and Divvy is your landlord. So they own it and they're responsible for those things. So that's a nice thing to know. And you do have up to 3 years to buy the home back from Divvy. And like I said, it is negotiable if you need more time. So qualification requirements, right? So a 550 credit score or higher is needed. The higher your credit score is, the better you are, right? So you'll qualify for better terms and have a little bit more buying power. I would say that you need to come in about a 600 to qualify for this, because we pull a Equifax Vantage version 2, and it is a little bit more stringent than what you see on like your Credit Karma or Credit Wise apps or anything like that. So having around that 600 range is going to secure you your pre-qualification. You do need to show that you've made $40,000 in annual income. You do need that 550 credit score. You can add 2 applicants to that to reach that $40,000 minimal threshold, but both applicants must reach the credit requirements first. You need to be employed at least 6 months, so you got to show a steady income. You can't have any bankruptcies or evictions in the past 12 months, and you need a debt to income ratio of 50% or less. So if you make 40 grand, you need to have less than $20,000 in debt to be able to qualify for this program. So what to do next, right? So first of all, you just need to make sure you meet all the requirements. Second of all, you need to decide if this is a program that fits your needs and your lifestyle and where you are and where you want to be in the future. Reach out to me with any further questions if I didn't answer them along this video already. If you are interested, ask me for the link to apply and we'll get you moving in the right direction. And basically the first thing that they're going to do is pull your credit, soft pull, remember, and that's how you're going to get pre-approved. And then to get fully approved, you need to show your proof of income and your pay stubs to show that your income qualifies. After you get approved, what we'll do is schedule a first-time homebuyer consultation where I'll run you through the program, run you through what it looks like to buy your first home, educate you on the process, tell you what it looks like to work with me and my team, and get you set up on a home search within the criteria that you're looking for. After we do that, we can really start looking at homes and making offers, and it goes as fast as you want it to go. I want you to keep in mind, though, that this is like buying your own home, right? It is a 30 to 90 day process. I would say even 45 to 90 day process. It's not a thing where if your lease ends next week and you need a place to live, this is not for you. This is buying a house. This is the traditional way of basically buying a house. And I want to stress that because I get a lot of people asking me, hey, I need a place to live. Like my lease ends next week. And I'm like, well, you're not going to make it. You know, we need a lot more time than that. So keep that in mind. That is all I have for you for this video. I hope I answered your questions. If not, reach out to me and I can get you moving in the right direction. So hope this helps, guys. Take care and God bless.